Hey, what's up? Welcome to DGen That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And so in this video, I am going to go over the AMC options for really, like the next couple months or month and a half. Because I am really curious to be going over them, and I kind of wanted to share my thought process with you guys because options can be a little confusing, and I do think that they can be a nice way to, gain a little bit of leverage, by expressing interest in a stock. One can buy call options that would then be later exercised to then acquire 100 shares per contract. And so, yeah, I'm interested in doing that over the next week. And so I just wanted to share my process kind of. I'll be going over the options table, max pain, as well as just kind of making a table for myself to just kind of prioritize or, list out my options, if you will. And so, hopefully this is helpful for you guys, whether you are interested in AMC or you're just interested in options. I do think this video should be helpful. But before I dive into it, I did want to say, I've been working all weekend, and I did also want to frame this video as, just being like, hanging out with a buddy at a bar, chatting about stocks, options. And so with that being said, with this Sunday evening being the start of my weekend, essentially, I don't have to work the next couple days, I am going to crack a beverage and say cheers to you all. Hope you had a great weekend. Hopefully you're looking forward to an exciting week ahead. I think it's going to be pretty exciting, but I also think that, if there are dip buying opportunities, they're not going to last long. And so I'm pretty excited about them. So cheers to you guys. And before I get on to AMC and the chart, I do see a comment from Grateful Turkey that GameStop is already popping off in the overnight trading on Robinhood. So I'm just going to check that on my phone. I'm not going to pull it up on the screen here, but this video is going to focus on AMC, but it is pretty closely related to GameStop in my view. And so let's just take a look here. It does look like it's popping off. So GameStop is now trading at a price of right around $31. So the overnight trading is up about 10%, right around $2.70 up. So I'll check that at the end of the stream. So it's looking pretty good. And so a lot of the numbers that I'm going over in this stream, the numbers are going to change when the market opens. And if GameStop is going up, if AMC is going up a lot, some of these orders may not get filled, so it is good to be considering that. But also, I do think it's good to consider that what happens in the overnight trading, or whether it's pre-market, after hours, sometimes that can kind of fake us out. So what we're seeing in the overnight trading, especially considering it's on Robinhood, that always sketches me out a little bit. But I do think it's good to, with options, you can't trade them after hours or overnight, but you can trade them when the market opens. So I do think it's good to be paying attention to the chart leading up to open, and I might actually be doing that. I could potentially do an early morning stream to see what's going on with AMC and GameStop. So maybe that's of interest. Let me know, and I'll consider it. But I will be doing ticker request live in about 55 minutes, so I will have to end this stream to switch over to that one. But I do think an hour is enough time to kind of go over my thought process. And so here with the chart, what I did want to talk about that is potentially of concern is, let's see, this white line here it should be actually, let's see, I drew that at the wrong spot. It's supposed to be June 21st. It got shifted over to June 20th. And so that line is the expiration for options monthly contracts expiring in June. So not this Friday, but next Friday. And so I wanted to see where that line intersects with this purple downtrend. I had it on the wrong day and it intersected right around $3, but I am going to adjust this horizontal line just to be right around where that line is. And so it's right around $3 a share. And that is a little bit concerning to me because that is a strike price for calls, for puts, whatnot. And, I do think that price could be driven down to that purple downtrend. And, so I just want to consider that, factor it into basically my risk assessment of the options. And yeah, let's see. I'm just going to type up in the chat real quick just so I can see what's said there. And well, it's up. So to me, that's a good sign. Yeah, I definitely think it's a good sign that GameStop is up in the overnight trading. AMC does not have overnight trading. So it's definitely good that it's up. It would be worse if it was down, of course. But I think it's also good to, like, the first 15 minutes of trading, it's really good to see what happens because a lot of times there can be fake outs and stuff. But, if that momentum that we're seeing now, if it's at $31 now and in pre-market it's at 40, I think that likely continue. But if it's still around 31, that could be kind of a signal that the momentum that we're seeing isn't really backed by too much. But so now switching back over to AMC, looking at the chart here, I'm actually going to start by looking at the max pain. And so I am very interested in the date of expiration, June 21st, largely because, that's when Roaring Kitty has his contracts expiring for GameStop, but also that is the monthly contract. There's just a lot more going on there with the monthly contracts versus the weeklies. And, with that, I feel like there's a lot more data to be looking at. And so that's the one I'm looking at here with Max Pain, but I am going to refresh this page in case it changed, but it probably didn't because it's the weekend and options aren't being traded. And so to do that, just scrolling up to the top, I'm just going to refresh the page, and here we can see that, it switched to this coming Friday. So I'm just going to change that to the 21st so we have the right date here at the bottom. And yeah, so Max Pain for the 21st is $4 a share. And so what Max Pain is, as far as I understand it, is just, this is the price where the maximum amount of call options would expire out of the money, so they'd expire worthless, and the maximum number of puts would expire out of the money, so worthless. So you see the puts over here in red, the call options over here in green. And so this does suggest that, there is a bias towards the upside. More people are bullish on this than they are bearish. But, the level at which the maximum number of these would be expiring worthless is $4. So that's what Max Pain is. And the reason why that's important is because that's when retail loses the most money and when market makers make the most money. And so it's kind of, retail wants price to be way up here, but market makers and, the bad actors and whatnot, they want price to be driven down to $4, if not lower. And so I think that's important to be paying attention to when looking at the options table. And so before I get into the options table, I'm going to break down kind of my thought process with how I want to approach AMC calls, most of them being in the money, and how I want to handle that moving forward. And so I got another comment here. That is interesting. Seems very bullish. Think that shorts are done for. Well, I think that, a lot of times when, something, it's like following the herd, doesn't always work in, the sheep's favor, I guess, but I do think that we're in a pretty unique situation where all of this, basically leveraged bullishness, if price does move higher, when we push price above $4 a share on the 21st, that could really be driving it higher. Roaring Kitty just posted on X. Let's check that out. I got this here. I got this notification. And also, I did want to mention this. What is an exit strategy? And before I flip over to his tweet, I just wanted to note that, he said that, and given the position that he has, he doesn't need an exit strategy. But I do think that it's important to note that in his streams, in his videos, he always mentions that, he's very aggressive and that his strategy may not work for others. So I just think it's good for us to all, consider, our situations and whatnot, and, just do what works for us as individuals. He's one for us to, idolize. And, we may not be able to live up to that. Just do what is right for you. And, for me, this trade is like a paycheck to paycheck kind of trade. So yeah, manage your risk accordingly, and there is no judgment. You do what you need to. But then switching over to here, I got this new post from Roaring Kitty, so cool to pull it up here. And what is he saying here? Let's see. All right, this is the heist. All right, this is the beginning of the heist from the Dark Knight, and we got the Roaring Kitty mask right there. So I think that, whether it's the green wildfire from Game of Thrones or the heist here from The Dark Knight. I think that we are in for quite a treat. I think it's going to be a pretty exciting week. And with that being said, I do think it will be good to be taking advantage of dips, whether that's with GameStop or AMC, but also do that while managing risk. And so before I get into the options table, I'm just going to go over this fancy table that I made at work today. Please don't tell my boss. Just going over kind of my thought process for options, what I'd like to do this week. If AMC's price is up violently in the morning, some of the orders that I'm looking at now or the fills the prices will not get filled, the orders will not get filled. And so I do think it's good to keep that into consideration, but I just wanted to go over, this table and kind of explain the breakdown of options and how I'm thinking about them as far as like my budgeting for the next week. And let's see, there's something that I put in my bookmarks on my phone. I don't know if it's going to be in my bookmarks here. I actually don't know how to find it, but it's basically like a little video of, or I guess a GIF of a little kid looking at a burger being made and somebody else taking it because they have to dollar cost average. They spend all their funds. So I think it's this, my strategy to make sure I have funds to, if I can't carry out all, carry out some of these orders that I'm interested in. And so here, looking at this table, I just have in this first column A, number of calls basically. These are individual call options that I'd potentially like to have filled. This first one that's in white, that is one that I already have. I'm going to explore the options table with you guys and look at, some orders that I might like to have filled leading up to the 21st. So ideally, really carrying out those orders tomorrow or on Tuesday, but, keeping track of price to see how these orders could be filled. And so this next column is the expiration date. That's when the contract would expire. And so leading up till that date, as long as the options price or the stock price is above the strike price, I could then execute and then buy these 100 shares at the strike price. And so that's why I have 100 shares here. I'm just looking at individual contracts, just kind of laying out kind of like a budget. And so the one over here that I have is a $3 strike. I do have one contract there that expires on June 21st. And interestingly, the cost that, that I would have, well, actually, I'm skipping ahead with that. So I will get over to the orange in a second. But so this column here, E, is the premium. And so in order to buy that contract, I had to spend $1.87 per share, so over here. And so the cost to buy that contract is $187, and so that's based on, this math here, 100 shares times $1.87. That is how I get the $1.87. And, as of right now, my cost to buy this contract, I already own it, so I don't have to buy it. So my cost to buy it is $0. But then for these other contracts that I will look at exploring the options in the table, I'll add them here, calculate out what the cost would be to buy the contracts as well as to buy the shares. And so here what I have in orange, if I were to execute my call, the total price per share would be $4.87, which I find this really interesting that the after hours closing price for AMC was $4.87. So, I am in the money with this, but my cost per share is effectively the average price or the approximate price of AMC right now. And so the way that I calculate this is just taking, the strike price, which is $3. If I were to execute this, buy 100 shares at $3 a share, that is $300. And then the premium is $1.87. That times 100 is 187. I combine those two numbers, divide by number of shares, or just take these two numbers here. I get $4.87. And so to me, buying 100 shares at $4.87, that's a great deal. But, in order to position myself to do that, I only had to front $180. I just have to now add $300 to that in order to exercise those call options. So the cost to exercise these total positions that I have here, which is just one right now, is $300. So whenever I decide to exercise that, I need to make sure that I have $300 in my account to do that. So that's why I have that there. So I'm just going to tally up all of the costs of the exercises, whatever options I look at, and the cost to buy. And so I can get a sense of, what do I need in my account right now to buy them? And this is really all just hypothetical. I may carry out some of these, I may not, but I just kind of wanted to discuss with you guys casually rather than just, do it by myself. And then so what's in red, that is what I would need to have in my account when I do decide to execute them. Exercise them. And so let's see here. I'm just going to look at some of the options for June 21st because, I'm most interested in that. And I do want to note that my strike is $3 a share, let's see, I keep switching to the wrong app. Which does correspond with this horizontal line here that I have right around $3 a share. That intersects with June 21st, and that corresponds with this purple downtrend. So I don't think it's going to be at that purple downtrend, but considering it has acted as prior resistance, has following that acted as notable support here, who knows? Maybe it comes down to there, and I don't want my contract to expire out of the money. And so I think that's something important to consider. However, though, max pain, if I do switch over here, is $4 a share. So hopefully we're closing well above that. And I'm sorry if I'm not catching up on the comments or the live chat, just because I want to make sure I get through all this before I start the ticker request live. But I will, take a look real quick here. Looks like a guy with a mask about to rob a bank. Yeah, so this is Heath Ledger's Joker from The Dark Knight, Christopher Nolan movie, Christian Bale as Batman. And this is like the opening scene, which I think is like one of the most iconic opening scenes as a bank heist movie or a superhero movie. And so this is Heath Ledger looking away from the camera, acting as the Joker with the Roaring Kitty mask there. And so, basically he's saying that there's a heist that's going to happen. And so I think it's going to be an exciting week. And let's see, just catching up on these. Somebody said it is from the 2008 Batman. Yes, that's for sure. Is that a movie theater on the left maybe? I'm not sure exactly, but I realize, this is in Chicago. I don't live too far from Chicago, and I realize I want to go to that street corner. I could definitely find it because that self-park sign with the L right there, is pretty, I think it's got to be right around the loop. So I might be checking out that location just for fun. But yeah, I'm not sure what's there exactly. And is that a movie poster under where it says self-park? I'm not sure. It might just be an average. I don't think it's important necessarily. Execute sounds cooler. I don't know what that means. Execute sounds cooler as far as, exercise. That's for sure. Isn't the Joker also considered a wild card? Very good point. Yeah. Very unpredictable. And so, it's going to be maybe he's saying he's going to do something unpredictable this week. I think it's going to be a pretty cool week. But anyways, I'm going to get to the options table and to just kind of go through my thought process of, what I'm looking at, because I do want to establish a larger position in AMC. I do also want to add to my GameStop position this week, but I can't do that with calls just because they're so expensive. The premium's pretty high on those. And also just I have a smaller GameStop position, and I am, for the most part, green. One of my accounts is a little bit red, but I'm more red with AMC, so I really want to get that down. And I think that calls, buying in the money calls, is a good way to do that. And so over here, I'm looking in Webull. I'm just going to go to the options table so we can look at this, and this is pulled up to June 21st. And so we can see actually the call option that I do have. It's the $3 strike right where the cursor is. And so if I were to sell that, that would yield me $192. When I put down $187, it's not worth it to me. I want to hold that closer to expiration, if not to expiration. And then I want to exercise that. And then I get 100 shares at $3 a share. That sounds good to me. But I kind of want to, explore some other options here in case, let's say, worst case scenario, price on the 21st is lower than $3 a share. And also, I think a good thing to factor in with this is while this is buying shares at a cost of $3 per share, with that premium, this is the cost to buy right here, $2.19 times 100 is $219. And so you add that with the $3 per share, and that puts the cost for 100 shares at $5.19. So I just want to throw that out there. I think it's worth it to buy 100 shares of AMC at $5, right around there. I think it's totally worth it. But since I already have one call option here, and I'm still fairly new with options, just trying to get the feel for them, I'm going to look for the other ones. And since I do have, let's see, this, purple line here that does intersect with the date of expiration and $3 a share, I keep switching the wrong app. Switch it over to options, the options table here. I'm curious about the $2.50 or $2 strike prices. I don't think price is going that low, but I want to have exposure to be able to get more shares. But I don't necessarily want to put up, with the closing price here, $491 right now. I'd be happy to pay that, in a couple weeks, right around expiration, or pay the difference, I should say. And so here, if we look at the $2.50 strike, we can see that the cost to buy is $2.68. And so that would put the total price right around, $5.18. So, pretty similar to what you see with the $3 strike, but there's less risk because the strike price is lower. And so that gives me a little bit more wiggle room in case, for whatever reason, price does come down. I don't think it's going to happen, but, I don't want to just lose all this premium that I'm putting down. I want to be able to exercise these options. And so I think $2.50, I think that's a reasonable strike, at least for me, to consider. Also curious about $2 and the $2 strike, I should say. And so looking at that, the premium is $2.99 times 100, $299. So that's a lot. You're paying more for the premium than you would be for the shares. That'd just be $200. But you got that big buffer. We haven't seen price go down to $2 a share. Like the lowest is $2.38. So that makes me feel, pretty secure that price is definitely going to be closing above this, and I can definitely exercise that call and get 100 shares at $2 a share. And so I'm actually going to put both of these in the table that I've populated, just because I think both of them, are ones that I want to consider. And I'm actually not too concerned about price going below $2.50, but I would be paying $2 plus $2.99. That's $4.99 versus $2.50 plus $2.68. That is more than $5 total. So, I think that's something to consider. So I'm just going to add this stuff over to the table here. So that's looking at $2.50 and $2.68. So let's see. The strike here, $2.50, and the premium, I said $2.68. And this is the same expiration date. And so I thought, oh yeah, that's the buy total. Okay, so that calculates that, got that all figured out. And so my cost to buy, these shares, or this call option would be $268 now, but then with that $2.50, that would put the total cost to, actually, I don't know if I'm, exercise cost. Yeah, okay. And then it'd be $5.18 total. But then, like this week, tomorrow, if this order does get filled, I'd be paying $268, and then I could pay the difference, $250 later. So that's intriguing to me. I put less money down now, but I get exposure to 100 shares. And then here, I'm just going to, let's see, copy and paste that. This one's $2. And the premium here, I believe, was $2.99. So, it's like up front, I got to pay $299 versus $268. So that kind of sucks that I have to pay more now. But in total, I'm spending less on the shares. So that's kind of interesting. And I also should note, what's the open interest? Where are more people positioned as far as their options go? And so I can look at that here. We've got this open interest column. I know it's a little bit small, but this column does show the open interest. And so like the one position that I already have with the strike of $3 a share, that has 6.85 thousand contracts that are open currently. And so that's pretty good. It's more than what's at $2.50 and $2.50, pretty similar to that. But the one that's more popular as far as the in the money calls go is $4 a share. With that strike, there's over 21,000. That is max pain, so it does make sense that that would be the most popular call option. But, then we get to look into these out of the money call options. And so these go all the way up to a strike of $22 a share. Might AMC go up to $22 a share before and or on the 21st? I think it's definitely possible. I think it could get that high, but it may not close on that Friday above $22 a share. So that's where it gets kind of risky, and where buying out of the money call options is a little bit more like gambling, because you're like placing a bet that there will be volatility, price will go up, but it may not get to that strike price, or it may not close on it. And so my intention is not necessarily to swing for premium, but to establish more shares. And so I don't think that I think it's less likely that price will be closing at $22 a share or above than, $4 a share or above. But, we do see that there's a good amount of open interest for $22, but there's a ton, almost 100,000 contracts, 93.7 thousand contracts at a strike of $20 a share. And so, I think that is one that, a lot of people are just betting on price going up, but not necessarily that it will close at $20 a share. So I think that's one to swing and not necessarily to exercise, but I just wanted to point that out. And then another one that's also popular, you could probably guess it, $10 a share, because we just think in, we like zeros in our numbers. And so $10 strike, the open interest for that is 48.85 thousand contracts. And so with that, you're not spending hundreds of dollars on the contracts. That's why these are a little bit more interesting. You're only spending $35 with a $10 strike, or $19 for a $20 strike. So you got to put less down, and then you still get kind of exposure to that volatility. And so if I were to get any of these calls, I don't necessarily know that I'd want to exercise them at a strike of $10 when I could, do it at a lower price. But I do think there's something useful to consider, and I will probably add them to the table. But I also wanted to add one for the max pain, which is $4 a share. Similar, actually a lot more open interest, as I had mentioned, than the other in the money calls. And so I'm going to add that to the table, just, keep it as an option for myself. So when I'm looking at the table, when market opens, I kind of have a better idea of what I want to, which orders I'd like to execute and establish to ideally exercise to establish a larger AMC position. And so with the $4 strike, I'm going to add that to the table here. This also being, the same date. And I'm going to do $4 strike. And so the premium for that, let's see, that is $1.25. So I'd have to put down $1.25 right away. Times 100 is 125. And then so my cost per share total would be $5.25 if I were to exercise that. And so actually going with the $2 strike, I'd actually get the shares for a lower net cost. So I think that's pretty interesting. But, I'm having to put down more than double, $299 to get that exposure versus $125. So, I think it's good to, consider all the options here. And then, let's see, I'm also going to do, so these are all in the money. I'm going to add one that is out of the money just to kind of keep it on my radar. I'm going to do the $10 strike, and that is, let's see, because there's a lot of open interest there, and I think this would be to capitalize on premium and not necessarily to exercise. It's only $35, so I think that's pretty reasonable. So I'm going to put in 35 cents here Total cost to buy $35, but then total cost per share, a whopping $10.35. So that's why I think it's nice to, go with these in the money calls, because your net cost per share is going to be cheaper than doing an out of the money one. And that's really just a swing premium as far as I understand it. And so let's see. I've got about 30 minutes left, a little less than 30 minutes. And I'm sorry I'm not responding to the comments. I just, yeah. And Josh, I do see that Roaring Kitty did just post. And so this is, if you're not aware, if you guys haven't seen The Dark Knight, it's a great, great movie. So many things about it, whether it's just Heath Ledger's performance, the music, Christian Bale as the Batman, and just Chicago is just a really, it is Gotham City in that movie. So yeah, I just think it's really cool. And so this is Heath Ledger as the Joker with his back towards the camera, and he's holding a clown mask in the movie. Roaring Kitty has changed it to the cat mask. And this is right before Heath Ledger and a group of masked men wearing clown masks rob a bank. There's a heist. And so I think what he's suggesting is that, there's going to be some volatility. We're going to be robbing some banks. There's going to be a heist, this coming week as far as, what's going on with GameStop's price. And I think that will translate into what's going on with AMC. And also someone pointed this out in the chat that, the Joker's kind of a wild card. So, maybe Roaring Kitty's going to do something that we do not foresee this week. Maybe that's exercise some of his calls. Maybe that's push the price even higher by doing that. So I think that's pretty cool. And let's see. I'm going to get back to this table. I do want to add some more calls to it. And maybe, I might explore some of these other ones because, price doesn't necessarily get up to, let's say it doesn't close or get up to $10 a share between now and the 21st. I think it will, but let's say it doesn't, or it doesn't close on the 21st. It could be a little bit safer to go when out of the money, closer to the current price. So, like the $5 strike here, that is a premium of $75. The open interest is $27,000 versus, let's see, the $6 strike. And let's see, I'm just going to do, some math over here. I'm not going to keep updating the date because it's just the same number, but I'm going to do the 5 and the 6 just so we can kind of get a comparison, based on, what it is with that premium. So the $5 strike, that's a 75-cent premium. And with the $6 strike, that's a 62-cent premium. So our total cost, $5 strike, the lower strike, you're spending about $100 less per share doing it that way. So that to me is more appealing. Do I think price will be closing on the 21st above $5 a share? I think so, but I also think there's a possibility it could be lower than that. So it gets more risky the higher up that strike goes. So I'm actually going to delete the $6 one from here because for me at least, well, actually I'll leave it up there and maybe I'll shift the cells up or something. But I just wanted to have 10 on here to kind of see what's going on. And I actually, what I was thinking about, so these are all, the monthly contracts. We could look over now, oops, wrong date there. We could look over at the week following the monthly contracts, just giving us a little bit more buffer to exercise these calls. And so in order to do that, though, the first thing is not to check out this tweet again, but to go over to AMC Open Interest and then scroll up here. And by the way, this website is just, right here, maximum-pain.com. And then you just look at the options, and that's how you get to here. And so now I'm just going to switch over to the week following the monthly contracts in June. And so that is the expiration of June 28th, that following Friday. And so we can see that the max pain again is $4 a share. And I might actually, just out of curiosity's sake, go to July 5th. Check that out. And here, $4.50, so it's going up. That's good. And then let's see, the following week before we get into the July monthlies, we have $5. So yeah, this is trending in the right direction. I am liking this. And so with that being said, let's say maybe price does get pushed down before and or on the 21st, because let's say we're getting a big rally, and this is applicable for AMC, this is applicable for GameStop. Let's say we're getting a big rally on Thursday, so the 20th. It is in the interest of those who are short to drive the price down as much as possible before close on Friday. So if we start to get a pullback, that would not be so great for exercising the call options. But if the price is still held well above the max pain, which for this Friday, June 21st, is $4 a share currently, that will change as price goes higher. But if price closes well above $4 a share, that could trigger a gamma squeeze or a short squeeze that would then drive the price even higher. So whatever price movement we see leading up to the 21st, if price is closing on that Friday above max pain, I think we'd see violent continuation, cascading effects of these prices going higher. So I think it's kind of nice to have a little bit of a buffer, add that extra week on, or at least that's what I'm thinking. And so that's why I'm interested in the, let's see, not the July 12th, but the June 28th call. So I'm going to look over in the options table here, switching over to June 28th. And so let's say, considering $4 a share there. Let me switch back over to my little spreadsheet here. And one thing that I should probably do so you guys can see that header, I'm just going to freeze this. I don't use, here, I'm just going to freeze that there. Wait, dang it. Sorry, I'm doing this live. Okay, so I'm just going to split it. I guess right here is how I want to do it. And then, yeah, so you got the headers there, so I can scroll down. All right, cool. And so this, I'm going to look at some on the 28. Oops, man, why did I do that decimal? 628, just to consider, what the other options are. And so let's consider here, at this point, I don't necessarily want to be going so low because I think price will be going higher. And then whether I hold until expiration or, really I just want to be able to hold until the 21st and then I can execute then. If there is a lot of movement going higher, then I execute. Then that means I need 100 shares. And then that forces, market makers to provide those shares, and that drives the price even higher. It's a gamma squeeze. And so looking at the table here, since I've given myself that little bit of a buffer, I'm curious about, let's say, the $4 strike, and that's a premium of $1.47. And so if I look over at the $4 strike here, $1.47, so it's a little bit more expensive to do it with the later date, but that just gives me a week of cushion. So I kind of like that. And then that puts my price at my total price per share at around $5.47 versus $5.25. I don't think that's so bad. So I actually find that a little more intriguing than the ones expiring on the 21st. And if we do look at the open interest to see, kind of what others are doing, as far as the calls that are in the money goes, the $4 strike is the most popular at almost 2.5 thousand contracts there. But then, if we look at some of them that are out of the money, just so I have to pay less on premium, we can look at the $5 strike. So I'll do that. And that's got an open interest of 4.9 thousand. So, basically double the interest of the $4 strike. And so I'm just going to come over here and do that, $5. And what did I say? That's $5 is 97 cents premium. And so with that, that would then put my total at $5.97. And so that actually, makes it a little bit more risky, although I do pay less up front, but, paying an extra $50 to have a dollar buffer, that's worth it to me. But just, throwing it up here to consider what the options are. That's what's so nice about options. You explore the options table and you realize you get all these options because you have these options to either just swing for premium or, if you do exercise the calls, you can choose which strike price you want, how much you want to pay as the premium. And so it's just like a really nice way to navigate, not just buying some shares, not just buying a little bit here and there, but, dollar cost average in 100 share amounts. And so I find that intriguing. And so the $6 strike here, that is, let's see, the open interest, that's actually, the open interest is diminishing there. It's going down from about 5,000 to around 3,000. But just let's, consider it 6 and then the buy price is 79 cents. So I'm just going to throw $6 here, and then, did I say 79 cents? And so, yeah, I mean, that to me, it's just getting too pricey, a little too risky. So of these calls, let's just kind of think about what is most of interest, because I also did want to look at some calls that expire in July. And, I just kind of want to consider too with this, what is the total cost to exercise, or, how am I budgeting for this? And so the total to exercise, that would be, on these expirations, if I were to buy all of these contracts and I wanted to exercise all of them, I'd then have to pay $4,150 when I do exercise. So that's a good amount of money right there, or at least for me. I'm kind of a small fish. I was hoping to keep that around $1,000. Just so I have wiggle room to then kind of, add later, or, to add to GameStop positions, stuff like that. Because like I said, this is kind of like a paycheck to paycheck trade for me, and I just got paid on Friday, so I kind of want to, explore the options that I have starting tomorrow. And so here, I already have this position, so I'm not changing that. Of these options, let's just kind of compare them. Okay, $2.50 strike, I'm really only comparing that against the $2 strike. And to me, let's see, I don't think price is going down to $2.50 or $2. And the total price that I would be paying for the $2 strike is $21 cheaper than over here. So that's kind of appealing to me, but I'm actually going to leave those both up there because I do like to have those options. And then so let's see, this other one is the $4 strike. I can compare that to the $4 strike expiring the week after. And so this one up here, $4 strike, the total would be about $5.25 per share total, considering the premium cost and the strike price. But if I do the $4 one down here, that's $5.47. It's a little bit more expensive, but it gives me more wiggle room. So I kind of like that more. So I'm actually going to change this one to $6.28, and I'm going to adjust that premium to $1.47. And so that gives me some freedom down here to shift these up. And so I am going to do that. And then, okay, so I got, these four that seem kind of appealing. Let's see, this $10 one. That to me is kind of like gambling. I don't think I would carry it to expiration, and I don't think I would exercise it because I'd be paying $1,000 to exercise, getting an average share price of $10.35. I'd rather just buy 100 shares right now than do that, in all honesty. And so, but I do think that this is kind of a nice way to play it. If there is to be some volatility over the next couple weeks, I could capitalize on that and swing it for some premium and then roll that premium into either some AMC shares or some GameStop shares. So I like that. So I'm going to leave that one up there. And then now getting into these ones that are just barely above, the current price. They're just barely out of the money. Which ones look most appealing there? And so here, with that, I'm really going to be factoring in the total per share cost. And I'm going to compare the $5 one with the $5 one here. And so really, yeah, I mean, like the difference is, let's see, is that $22? And so this would also give me an extra week, a buffer week. So I'm going to put that one here. Ah, man, I screwed that up. I meant to do 28th. All right, so I got that, and then this should be 97. And now, I can shift these up. And now I'm just, oops, no, that's not what I wanted to do. I wanted to do, sorry, I'm doing this live. Okay, so now I've got these two, $6 strike. Which one's more appealing to me? Having the extra week buffer or, on the 21st? And so the total cost per share, it's, all of these, it's about $20 for that extra week. And, the cost for the down payment, if you will, for that premium is, either way below $1, which translates to $1 times 100, $100. So either way, it's pretty affordable. And so I kind of like this one that gives me that extra week of buffer. So I am going to move that one up here. And then so considering that, let's say I were to carry all of these. This one here is actually the only one I probably would just swing for the premium. I wouldn't necessarily do that to buy shares, because then I'd be having to spend $1,000, whenever I decide to exercise all of these. And so if I do consider that with the total cost to exercise, that would put me at 2,250, since I'm subtracting this 1,000 from it. And so for me, that's not that unreasonable. That's something that I could manage. And also it does put my buy total, if these were to all be executed, puts it below $1,000 total. So I find that kind of intriguing. I like that, but I do also want to explore some for the July 19th strike, which is the monthly for July. And so I'm going to explore that, and I do have just about 10 more minutes before I have to switch over to the ticker request live. And so I am going to switch back over, actually not before Webull. I do need to check Max Payne, just to have this in my mind. What is kind of like the potentially risky level that price will be driven to? And so that's $4.50. So it's hanging right around $4 to $5 over the course of the next month plus. As far as the Max Payne goes, I think we're going to be pushing that higher though, because I think a lot of calls are going to be expiring in the money. I think a lot of people are going to be exercising their calls. I think a lot of people are going to be buying shares, and I think it's going to be going higher. And so I think these Max Paynes will be pushed higher, but just for the time being, considering that $4 a share, or $4.50 a share, I should say. And so now I'm just going to pull up the July 19th options. And that was $4.50. Is that right? Yeah, $4.50. So the one that, is Max Payne. Let's see what the open interest is. And so really, yeah, I mean, we all like, our whole dollars. We like the zeros. We don't like a 0.5 anywhere. And so the in the money call that is most popular, has the highest open interest, which is 3.2 thousand contracts, is the $4 strike. And so the premium for that is $1.65. And so I'm going to consider that. And let's see, put that on my spreadsheet here. So that's, I hope what I'm going to do, I'm just going to move this down, and there's an ad that might pop up. I'm skipping it. Okay, and so I am just going to copy this down, because I think I might have screwed up some of the formatting, and then I am going to change this. I don't know why I go for the decimal, to July 19th. So it's that monthly contract. So I'm going to do that. And then I'm going to delete these, because I need to, figure out what those numbers are. And so for July 19th, I said the $4 strike, I was interested in that. And that has, $1.65. And I should note, actually, before I switch back over to the spreadsheet, I should note that I do have this selected. I think you can see it up here, that I'm only showing calls. I'm not interested in puts. I'm only showing calls here. And so this is, $1.65. And so that will put the total at $5.65. If I compare that to the one that expires June 28th, 547. This actually gives me some more wiggle room. So that's potentially more of interest, because then, I don't have to hold this to expiration, but it just gives me an extra month of buffer in case maybe price is driven down, trying to scare people out of their positions. I will not be surprised if we see a big move to the upside followed by a big move to the downside to get people to panic, infighting, whatnot. People sell their positions at the bottoms, and then it rallies later. And so I want to be prepared. I want to have enough time for that. So this one, seems pretty reasonable relative to this one. Rather than buying myself a week for $20, I could basically buy myself a month for $40. And so, yeah, I think, buying 100 shares, total cost per 100 per share, $5.65. That seems pretty reasonable to me. I think AMC is going to be much higher than that a month from now. So I'm fine with it. And then, I'll just explore a couple more here, which, are probably going to be out of the money. I'm going to look at the, let's see, what's the most open interest for July? Let's see, we got the $16 strike price. So that's, potentially interesting because, yeah, I mean, I think, we went up to like right around 12 bucks. I think we could go right up to right around 16 on the next leg up, maybe 20. And so I think this one's actually kind of appealing. There's 6,000. Oh, but the one, because we love our zeros, the one that has more interest other than 22 up here, I missed that, at 7.7 thousand. The one with the most open interest that's out of the money is the $10 strike. It's got about a little over 8,000 contracts there, and that premium is 69. And so, I'm going to have to put that on the table just because of that. So that is $10 strike, and that's 69. So 1069. And so, that again is not necessarily one that I would want to hold to expiration because it's $1,000 per contract, but that's one to potentially swing. But with that, I think it's also important to pay attention to theta. That is the decay. Every day these contracts go down a good amount. And so at $10, it goes down about 2 cents, which translates to around $2 every day. And that's pretty similar to all of these. If I look at the ones from June 28th, that theta decay is actually higher, and that's because it's getting closer to that expiration. June 21st, probably around 3 cents, getting up to 4 cents. So that does make sense. As they get closer to expiration, if they're out of the money, they're worth $0, and so it just kind of ramps up that theta decay there. And so let's see, I think I got one more spot on my spreadsheet to add, and so I will consider, let's see, I think the $5 strike, because let's see, if I compare that with the 6, which again has higher open interest than the $5 strike, but that's, I'm paying $124 up front, and then I'd exercise it at $5. It's a $20 difference between these because it's $104 plus $600 when exercising those. And so let's see. Yeah, but then there's more risk because it's higher up, and theta decay for these is going to be about similar. I don't typically pay attention to theta decay too much. I'm still getting still pretty new to options and in the money calls. But looking at these, I'm interested, and I'll put them both on the table. I'll add another row here, and so this is 11. I don't think I calculated these numbers down to that, so I'll just add that and add this. And so I'm thinking here 5 and 6. And so with that being said, the $5 one has a buy price for the premium of $1.24, and the other one, $6 strike, is $1.04. Oops. And so with that being said, you're paying a notable amount more. Let's see, is that $75 more? About more than $75. That's 70. Let's see, that's $80 more. Dang. So yeah, I think that this $5 strike's a little more appealing. Although you do have to pay $20 up front. You save $80 in the end if you hold it to expiration. And, for me, of all of these, considering the current price, I'd be willing to exercise any of them going up to $6 for that strike price. But getting up to $10, I'd rather just buy 100 shares right now at current price, which is below $5 a share. And so, with that, I will try to catch up on the comments, but I'm probably going to close this down and then switch over to Ticker Request Live. But yeah, hopefully this was helpful for you guys. I'm going to make sure that I save this because I'm going to use this as a resource for myself and kind of, establishing a position. And I should note, though, that I did go over my budget of $1,000 here. And so, I don't necessarily think I'm going to carry out all of these, but I'm going to consider what the options are and explore them. So hopefully that was helpful. And I guess I should scroll this up because Ed's head's in the way. And so, yeah, these are the ones for July with the cost to buys right here. So, the $10 strike, very appealing. You got to spend less than $100, but, there's just more risk with the possibility of it closing below $10 a share on that date and expiring worthless. And so, yeah, I'm just going to try to catch. Hey, Kevin, I see your comments. Can I check Max Payne for big? I will in ticker request live, but I just wanted to leave this one as kind of purely AMC with a little bit of GameStop in case people want to watch it after the fact. Because for me, it's a good lesson. I thought it might be a good lesson for others in just getting more comfortable with the options table. And so Kevin's saying, also just out of curiosity, why are we attacking shorters instead of hit up the SEC for allowing fraud? I think that's a really good point. I think it's just like because they allow the problem to happen and because we don't have money backing us. This is a way for us to have money backing us. And on that note, I don't know if you ever watched The Problem with Jon Stewart, but he did an episode on the stock market and he interviewed Gary Gensler. And it's just like the most pathetic interview because it's basically just like his hands are tied because these multi-billion dollar firms are basically, they got their hand on his shoulder saying, hey, no, buddy, you can't do that. And so, and like the SEC's budget is just so small that they can only enforce so much. And this is big money, white collar crime. And how many people, you watch The Big Short, how many people went to prison at the end of that movie? At the end of that story, not many. And so, people don't pay the consequences for this. And this is a way for the people to rise up like the Sept in Game of Thrones and to fight back, power in numbers and retail. We got it. So, and I think a great way to do that is by exploring options. We create a problem for big money. That becomes a big problem for the SEC and they're going to have to deal with it, let's say. And so, and along the way, learn about the markets, get ourselves a little bit better educated and have an edge. So I think it's a great thing to do. And then so, I see that there's some comments about some other comments. Sorry I wasn't able to. I think I caught most of the comments about Roaring Kitty and his post. And so I will actually close this with his, what happened? Got to go to my notifications and Roaring Kitty. So he posted this. This, if you're not aware, is Heath Ledger's Joker from The Dark Knight Rises, which came out in 2008. This is the opening scene. I recommend at least watching that tonight if you can. Beautiful scene. Just a great story in that heist. They rob a bank. And in that, this Joker, this Heath Ledger's character, he's wearing this clown mask. And so this is Roaring Kitty with his mask, suggesting that, there's going to be a little bit of a heist this week, with some volatility to the upside or that the Joker is a wild card. And so, because the Joker is a wild card, so we might be seeing something unpredictable happening, whether that's from Roaring Kitty himself, from something else. So I think it's going to be an exciting week. And and so I'm excited, and I am excited to. I plan on picking up some GameStop shares, but I'm not going to be too aggressive with them just because, I'm more heavily positioned in AMC and not in the green with AMC. And so I want to take advantage of the dip while I'm in the dip. But I'm also going to be adding to my GameStop position as well. It's been a really exciting week. Thank you all for joining this. I hope it was useful, and also I hope that the video that I did kind of explaining the possibility of Roaring Kitty exercising his calls, that's my best performing video so far, so thank you so much for watching that, and perhaps maybe this week we start to see him exercising those calls. But with that being said, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos and streams like this. Thank you so much for the comments in the live chat, but I am going to be switching over to Ticker Request Live, and you can join me there and share your requests with me, and I'll look over the charts in that. So just maybe give me a couple minutes, and I'll switch over there. So